What's up everyone, it's Pluto. I'm making a short video real quick, about 5 to 10 minutes long, about the pre-market strategy. And I know I had a video on it earlier in my, like an older video about it in my YouTube channel, but I'm going to be making it more in detailed one and a faster one. I'm going to be going over a few examples, and if you don't get it, you can restart the video and just watch it as many times as you want. So basically, this black area is pre-market. I turned it on in my settings. Just go to settings, scroll down, session, extended hours trading, and then so you're gonna want to go to the pre-market right before open, and you're gonna look at the candlestick right before market open. So this right here is market open, and all this right here is market, or all this right here is pre-market. So 8:30 right here. Oh, I'm still on New York time. Let's go Chicago. Okay, so basically, you're going to look at the candlestick right before market open on the 1 minute chart, right? And obviously, current price is down here right before market open, and you're going to go, if there's no clear high and low, you're going to go 25 cents below and 25 cents higher, so that you can give the market enough space to move. So that you can give the market enough space to move up and down after market open, and then it'll break either level, and then that's when you'll know the momentum's going to start, and then you bet that direction. So if it was like that, and you'd bet up. So basically, you give it 25 cents worth of room. So this is at 432.90. So what is that? 80, 70, and then 65. So you're going to bring it down all the way to 65. Have a low like right there, and then you're gonna have a starting from the bottom again, since this is a black candlestick and the bottom is current price. You're gonna go up to you're gonna go up 25 cents from there. So what is that? 0.90. So that's gonna be at 15. That's right here, 433.15. So it went 25 cents up. You're on line right there. So your first priority is always space. And your second priority is if you can find a candlestick or like a bounce or like a little high or something that could like possibly act as a level, you'll move that line down to there. So you see how like our line is up here, but there was like a little downtrend and then up, and then it went back down. I'm gonna move this down to here, and now this is my relative high instead of it being up here. So this is my relative high, this is my relative low. And then so that's enough space. It's 50 cents worth of space for the stock to move up and down in between these lines before it breaks aside, and then you can get calls or puts. And then obviously this high right here was one of my take profits, and so we got in at around here-ish, or no, actually, well, above the line, obviously. So we got in above here, and then we played that, and then I took some profit right there, and then it came back down to my break even. And break even is the place where you got in, right? So let's say I got into calls, so I bet that the market was going to go up. Let's say I got into some calls right here because it broke my line, correct? So this is my break even point. So I bought in right here, so from here I make money, down from here I lose money. So this is the break even, where this is the zero line. I don't lose any money here and I don't make any money there. So after my take profit one gets hit, right, my new stop loss is break even, which means I can't possibly lose any money because I just sold up here at like the $0 mark. My first stop loss was at 25%. So let's say I got in up here, 25% would be like around here-ish if it came back down to here. But since it did hit my take profit, the new stop loss is a little higher. So I'll go over that real quick as well. So let's say I got into a stock right here, and this is my stop loss because it's 25% low, right? And blah blah blah, it's going up, and then it comes down. I'll never let myself get below this area. I sell immediately at my 25% or my 30%, whatever your stop loss is. 25 to 30% is the best. And so let's just pretend like this is my stop loss, right? 25%. And then it goes up, hits my take profit one, right? Let's say hit my take profit one. Now my new stop loss is where I originally bought in at. So that way I never let myself go negative on the trade, because remember, this is the zero line. I make money above here and I lose money below there. So this is my zero line. And so that's my new stop loss, is so that I don't lose any money and I don't let it go under. And then basically And let me give you another example. So that's still my break-even line. That's my take. This is my take profit 1. Let's say that this is my take profit 2, right? All right, let's just pretend like this is my take profit 2, right? And so blah 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 blah. It does its thing. Hit my take profit 2, right? This is my take profit 2 area, and if it comes back down to my take profit 1, I'll sell over here. This is my new stop loss. So since it hit my take profit 2, this is my new stop loss. I'll never let it get below before my take profit 1. And I'm gonna give you another example. So let's pretend it just kept going up and hit my take profit 3. My take profit 2 is now my stop loss. So it comes back down to here, I sell there completely. That kind of looks like a penis. Okay, anyways. But basically, every time it goes up in increments, and every time it touches your increment, you sell. So let's pretend I bought in right here. It goes up. This is my new stop loss, and blah blah blah. It goes up. This is my new stop loss. It goes up. This is my new stop loss. Say another take profit is right there, and then it doesn't hit it, and it comes back down. I just sold fully out of my trade. So I'll give you another example of the pre-market strategy now that we've discussed risk management or an aspect of it. So you look at the last candlestick before market open, right? So this black area again is pre-market. You look at this candlestick, go 25 cents lower. So this is at 433.95 ish. So you go dollar, and so you go down to. So I'm gonna take that. I'm gonna go down to 70. And that is 25 cents. So obviously, if there wasn't any low right here, if there weren't any candlesticks right here, this right here would be my 25-cent mark, but there is. So I'm going to move this down just a little bit because this is a low right here. This little bounce right here, because it came down, then it bounced up, that is my low. It's okay if you move the 25-cent mark down a little bit if there is candlesticks near it, because essentially you're looking for a level with that 25-cent mark. And if you can find one, then that's perfect. You want to move it to that level. And if you can't find one, market will eventually make its own level at that 25-cent area. Let's say you go up 25 cents from here, which is right here. And so this is your level for a 25-cent mark, right? And then, oh, boom, what do you look? There's a little up, down, there's a bounce right here, right? Because this candlestick went up and then it curved down, it bounced down. So I'm just going to move this, instead of it being up here, I'm going to move it just down there. And that is my pre-market relative high, and this is my pre-market relative low. And then whichever side it breaks, look, this is my pre-market relative low, this is my pre-market relative high. So it broke my high. I got calls right here maybe, or right here if you didn't get in off this. And then blah, blah, blah. Boom, it goes up. You take profit. This high right here, since it went up and then down, this is a good area to take profit. So right here, you take some profit, blah, blah, blah. You find more areas to take profit, etc., etc. All right, let's look for one more example before I end the video. So you look at this, go 25 cents down. Maybe it's right here, down 25 cents. Maybe that's like around here somewhere. And there's a low right here. So you're going to move this line, the pre-market relative low, instead of being up here, since there's a bounce, you're going to move it down here. And then that is your pre-market relative low. And so you see how it came down, you would have gotten puts right here. You would have bet that it was going to go down. And then it bounced off perfectly off that pre-market relative low, and then it kept going down. And then you would have made money throughout this whole area. You maybe take some profit down here. Maybe take some profit down here. I mean, I got stopped out because I took profit down here, and then I let it. I sold at break when it went up back up to break even, right? But for some reason you didn't, because it barely touched and came back down. You would have also made way more money. All right, one more. So this is the highest point. So I would have put it right here because 25 cents worth of space, but market dumped. So I was like, market like went down as soon as it opened, right? It went like this. So I was just like, all right, if it comes back up, I might as well catch that little momentum pivot and put this right here. And so if it does come back up from this, I'm gonna just get calls off of here. But it didn't come back up, so I just kept it down there. And then this was my little low because This was the closest point of low before market open. Plus, starting from up here, because this was current price before market open, go down 25 cents. That is that area. Plus, that was a good low. So I had that, and then I got puts right here. And then blah blah blah. Market plays out. It worked perfectly. So you notice how like we haven't taken any L's besides maybe that one L. We've won for like around 2 straight weeks with this strategy, and especially with good risk to reward ratio. We've caught 100%, 200%, 300% multiple times, and the most you lose is 25% because that's your stop loss. So let's say we got into a trade, blah blah blah, right here, stop loss, whatever it is. Whenever it hits 25% to 30%, you hop out. Take profit 1 right here because this is an area of liquidity or like a little bounce, and then take profit 2 somewhere down here. Maybe that doesn't get hit, but you know, it is what it is. Your break even doesn't even get hit, and it just keeps going back down. But yeah, that's basically the pre-market strategy. Hope you guys have a good one. Try to keep it short for you guys. See you later.